while gold is trying to cling on to 2500, and while the general markets are experiencing short-term volatility, let's look at a longer-term potential of one requested developer explorer, and that is Andean Silver. Welcome to myfinanceteacher.org, where we have much more details on some of the most promising juniors that will give your portfolio that additional boost once miners finally catch up and overtake gold's performance. So coming back to Andean Silver, firstly I need to warn you guys that investing in explorers is risky. Any sort of bad drill results can be destructive for this sort of investment. Plus, I'm not your qualified investment advisor, we're simply looking at publicly available information together. So Andean Silver, recently in July this year, they changed their name from Meteor Silver to Andean Silver. And Andean Silver currently has 3 main projects in precious metals and one more, a lithium-based project in Australia. Their flagship project is Cerro Bayo, that's in the southern part of Chile. All of the projects are 100% owned by Andean Silver, with Cerro Bayo covering 285 square kilometers, so beyond the existing reserves that have already been discovered in the ground at this Cerro Bayo project. There is also a potential for expanding those reserves. Cerro Bayo mine, in fact, has been a producing mine for over 15 years and has only been on care and maintenance since 2022, implying that the infrastructure is already there. In fact, corporate presentations claim that Cerro Bayo is a ready-to-go silver-gold mine. Not far from Cerro Bayo there is another silver-gold project, also in Chile, Los Domos, and it covers 4,100 hectares with a very interesting exploration potential, with some drill holes already showing gold and silver intercepts. We'll have a look at the drill results pretty soon. Additionally, Los Domos also has some zinc and lead mineralization. Next project, Cerro Diablo, is also not far from their flagship Cerro Bayo, at a distance of only about 25 kilometers. And this project, Cerro Diablo, covers over 4,500 hectares. No drilling has been conducted at Cerro Diablo for quite a while, but some historic drilling does show gold and copper-rich zones, with copper content ranging anywhere from 6 to 20% among the highlighted drill results. Beyond these 3 main projects, Andean Silver also has a lithium-based project in Australia. So that's a general background to Andean Silver. Among recent news, if memory serves well, back in May and in July, Andean Silver has reported very high-grade discoveries at their flagship project, which will very likely lead to a resource update as company promises sometime by the end of this year. So if the update is significant, that might actually provide a really nice boost to share prices. We'll talk about share prices soon. Generally, what we are doing here is trying to look at some sort of valuation for this very risky developer explorer. And we're going to start with the resource base. The flagship project already shows 6.5 million ounces of silver, that's in M&I resources, measured in indicated resources, and 60,000 ounces of gold. Beyond the M&I resources, they also have inferred resources, which are a little bit less certain in terms of their economic viability. And within the inferred resources, Andean Silver has 12.3 million ounces of silver and 319,000 ounces of gold. Altogether, if you convert all of that into silver equivalent, that would be around 50.2 million ounces of silver equivalent. These reserves, though, are estimated at the gold price of $1,850 and silver price of $24. If likely Fed rate cuts and future inflation push precious metals prices much higher, the economic viability of these already discovered reserves would increase, perhaps also increasing the amount of precious metals that can be extracted. Looking at these sort of developer explorers, I mostly focus on juniors that do have at least some defined resource in the ground that can provide at least some cushion to the valuation. And beyond this resource in the ground, there is a very nice potential to expand that resource. because all of those 50 million ounces of silver equivalent are concentrated in 3 targets of the flagship project. Those are the Taitao, Koita and Delia targets. As you see on this map, there are many more targets with interesting drill intercepts as well as rock chip samples. We see a silver content in the thousands of grams per ton, with gold content reaching over 160 grams per ton in some of those rock chips. And drill intercepts at this Pegaso 7 target also showing interesting results. So you see 10 grams per ton of gold equivalent, 8 grams per ton, 4 grams per ton of gold equivalent, and even 165 grams per ton of gold equivalent, although over only 1.1 meters of the intercept. Nevertheless, the potential for the resource expansion is significant. Again, it's actually expected somewhere by the end of this year. Still, without even considering any of the expansion possibility, looking at the value of what's already been discovered in the ground, let's plug in the silver price of say $30 and gold price of only, let's say, $2,300. Although gold price is currently trying to cling on to $2,500. Next, let's have a wild assumption here, as we don't have the PEA yet, preliminary economic assessment. Let's assume a relatively high all-in sustaining costs for both silver and gold at $18 and $1,500 respectively. I do suppose this level for all-in sustaining costs is relatively high, again, because this is a past producing mine which does have infrastructure in place. So there is a potential that the costs are actually going to be lower. Beyond that, instead of applying this margin, the difference between price and all-in sustaining costs, so instead of applying this margin to full resources, I'm only going to apply that to half of M&I resources and only 1/3 of inferred resources, as those are slightly less certain economically. So what it means is I do tend to lean quite a lot on the conservative side in our valuations of either major gold miners or juniors, which we discuss in detail over here in this category, juniors in metals. So applying this margin to half of M&I resources and 1/3 of inferred resources gives us a resource value of around $204 million in the ground, and that's US dollars. But before the mine can be taken off care and maintenance and for mining to resume, there might be some capex. Again, my assumption for capex is relatively low. And that is because the infrastructure is already in place. As I mentioned, the mine has been on care and maintenance since October 2022. The most recent financial statement shows debts very low at around 16,000 Australian dollars. Let's just call it less than 20,000 US dollars. And for taxes, to be honest, I don't want to spend too much time on the details. I'm just gonna assume a flat tax rate of 20%. In that case, the resource value after debt and capex and taxes will be over $162 million. But again, it will take time to extract all of those resources out of the ground. So we're going to take into account the time value of money, applying the discount rate of, say, 7%. We can actually play around with this number, change it to perhaps whatever you suggest down in the comments below, and see how it affects the valuation. So drop your suggestions for this discount rate down in the comments. For the mine life, again, before the PEA is out, I'm just going to arbitrarily assume 14 years for the average mine life. In that case, the discounted value of what's already been discovered after all the costs is over 101 million US dollars. Remember, this is without any upside potential through addition to the resources in the ground, which is again expected by the end of this year. So we are staying pretty conservative here. And comparing that to the share prices right now, let's divide this discounted value after all the costs by the number of shares outstanding, which will give us about 90 cents, that's US cents. Or if you divide by fully diluted shares, including all the options, that would give us a value of around 70 US cents per share. So anywhere around 70 to 90 cents per share is the more or less fair value for the existing resources down in the ground. That's if the management doesn't make too many mistakes and doesn't dilute too much. Talking about dilution, what we like to do with the members at myfinancesteacher.org is compare current cash position versus the company's burn rate. Historically, although the history of this company isn't long, historically they're burning around $9 to $10 million Australian per year, and the current cash position is at about 10.1 million Australian dollars. So they have at least a year of runway ahead of them. Hence, if there is any sort of dilution, you would probably expect that somewhere in the middle of next year, 2025. That's regarding dilution. As for management making any serious mistakes, Andean Silver does have a very qualified management. The CEO, Tim Lanieri, has experience at Northern Star. He moved from Northern Star to, at that time, Minter Mining back in March 2023 as a chief geologist, later becoming the CEO of Andean Silver. COO Damien Coerber has extensive experience, including work for Newcrest, and very impressively, he's been an integral part in discoveries for AngloGold Ashanti as well as Newmont. And as for corporate consultant Steve Parson, he also does have a very impressive experience leading Bellevue Gold to a 3 million ounce gold discovery. So the longer term potential here is very attractive. But everything has its price and things can be too expensive. Hence you do want to look at the share prices. Here's the share price of Andean Silver, that's in Australian dollars. And if you convert our US dollar valuation into Australian dollars, the value of current resources in the ground would be somewhere around 90 cents to perhaps over $1 Australian. At the moment, the share price is in decline as everything is dropping. And over the next short term, if gold, say, retests the 50-day moving average or some of the recent uptrends, which would coincide pretty much with that 50-day moving average, if gold price comes down to the low range of the Bollinger Bands, that might provide a safer buying opportunity on Andean Silver, maybe a bit of an inverse head and shoulders formation, with the height of this formation at about 40 cents, which would then technically project to about $1.4, $1.5 Australian. For now though, let's see if there will be a chance to pick up some shares at around 70 cents. While we're waiting, let me know what you think of this video down in the comments below. Give this video a like and please share it with your friends. For much more details on some of the most promising juniors, make sure to check out this Juniors in Metals category at myfinancesteacher.org. Have a terrific Thursday. Bye bye.